So the title of this panel is really is about sovereign wealth funds and their focus in where they are investing these days. But more importantly, I think to give the audience a little exposure to the two groups, maybe understand what is the intent of a sovereign wealth fund, why were they created. Our two panelists here are good friends of March Capital. They're both investors in the fund, so we've known each other for a long time. And if we have time in the end, we'll open it up to questions from the audience. But if you get started, maybe we'll ask, starting with you, Ibrahim, a little introduction of the entity, of yourself, what's interesting these days, how things are going.
Thank you so much.
Whatever you want to talk about.
Yeah, thank you so much for having us and for moderating the 16th panel today. So I head up ventures at Mubadala, and Mubadala is a very large sovereign wealth fund. We operate all around the world. Fairly large investor. We manage about $300 billion of assets under management. But traditionally, we were a large industrial investor and an energy investor. We really got into technology in 2007 with our first foray into semiconductors. And then in 2016, we launched our ventures business. And the premise of launching our ventures business in 2016 was, as many of you know, increasingly technology, becoming vital to every other sector. And even if we look at Abu Dhabi and the UAE's GDP, where technology was becoming more and more prevalent in the economic makeup, and as you heard Mike Milken today talk about all these sectors being massively disrupted by tech, it was important for an entity like Mubadala to be very active in tech. And that was really the launch of our ventures business in 2016, 2017. Very good timing. It was good times in 2016, 2017, which I'm sure we'll talk about what's happening right now. And fast forward till today, we have offices in San Francisco, in London, and Abu Dhabi. We invest early, we invest in growth, and we also manage a fairly large fund of funds portfolio. We're proud LPs in March. Suman did not tell me to say that.
We will have some fun around that because we want to know what's happening to your fund of funds.
Yes, I think last but not least, before I turn it over, it's, in addition, our product to the founders is obviously we talk about capital and our size and our scope and our scale. But I think probably the most important shift that we had to go through as a sovereign wealth fund was around the mindset. When setting up a ventures business, we had to shift our mindset to one that was very, very founder focused. That it wasn't about us anymore, and it wasn't about our capital anymore. That this is about waking up every day and willing the success of the founders. And that was a very, very big shift. It took us a lot of work to actually make happen. But that's a really, really important element in setting up ventures business for a very large institution like us, and refining and building and growing and learning and improving over the past 7 years about how do we operate in a very, very competitive venture business.
Abdul, a little introduction of your group and yourself as well would be very good.
Sure, yeah, thanks. We are happy investors in the current fund, which has been a couple of weeks old, so we'll see. It took us 4, but we're here. So Abdul Santiago, so I run the Sovereign Wealth Fund out of Panama. We are, aside from a rounding error from next to you, we are essentially a rainy day fund for the country. It's about $1.5 billion, and it's a public fund. These are public assets. We take that very, very seriously. Our foray into what I call private capital, which obviously includes private credit, private equity and venture, took us a little bit because we had to first convince ourselves that it was value, it was accretive to the portfolio to be involved in this asset class. I think we made that case. The board obviously had a lot of say into that decision. And again, hear me throughout this conversation about the fact that we're public assets. Our stakeholders are many. In our case, 4.2 million people, and we have to make decisions that are fiduciary in essence, even though we don't have a liability. We're not like a pension fund.
And you don't have payouts.
We don't have payouts. We do, but we don't have consistent payouts.
Yeah, you have when needed payouts. Yes.
And I guess before I turn it over to you, not all sovereign wealth funds are the same.
Correct.
We are modeled after an endowment or a foundation. And so we don't have specific payouts, but we do have some payouts if there's a natural, it's literally a rainy day.
If there's a shortfall.
Right. If there's an earthquake or there's a major situation in the country, then the government can come in and say, we need X amount of money, and there's a formula for that. During COVID, that's exactly what happened. And going back to the definition of a sovereign wealth fund, the objective is for you guys that don't know, apologies to the others, but I mean it is essentially a vehicle to take an asset, a depleting asset, and then take some of those revenues or income that derives out of that and invest it for the long term. Not all of it, obviously, because you get to use some for your budget if you're a country. But that's essentially the model. And so when this fund was created, something like 10 years ago, we don't produce oil. I think there is oil somewhere in the in the plates there near Panama, but we don't produce any oil. But what we did have was a canal, and so the picture looks the same.
It's a pretty famous canal, I think.
Right, yeah, right. It's a seventh or eighth wonder of the world, whatever it is. But so that was the idea. The idea was the Panama Canal produces revenue and income, and we should get some of that income to invest in put it in the sovereign wealth fund. I don't mind to get sidetracked here, but we still have yet to receive any money from the Panama Canal, but we did start with seed money. So that's
one interesting point, we've been in technology now for more than 2 decades. Ibrahim and I have known each other for a long time. Never heard of the Panama Sovereign Wealth Fund. We really appreciate you investing in our fund, but how did you hear of it? Like, how did you end up there?
So when I hear people say, I haven't heard of the Panama Sovereign, you're basically insulting me.
Not really. We're curious how you ended up there.
Because that means I can't job.
I can't invest. I can't insult my own investors.
Right. Look, I mean, we're sort of nose to the grindstone. We try to focus on what we do. We're not, communications experts. We try to do our best with the assets that we have and to manage it. So my background is a little bit meanders, but I served in the military, in the U.S. military. I've been in Wall Street. I was a regulator at some point, and prior to this role, I was an energy analyst. So I'm big on
you understand oil.
By the way, we'll get into that conversation. But I mean, that's just the equation there is very, very attractive for sovereign money, especially the ones that are derived from oil, to continue investing for a very, very long time. But anyway, so that's sort of my background. I ended up there. I pulled the short end of the stick, I guess.
Is it only tech, or is it more than tech?
In terms of our investments, so we're basically public investors, and then we moved towards privates about 4 years ago, 3 or 4 years ago. So and we try to diversify our private capital allocation. Clearly, tech is important. I personally, and I think we believe in technologization, that's not a word, I just made it up, of everything. And so we want to be a part of that, even if it's a...
Okay, you're going to have to say that word again, because I don't think I understood it. But Ibrahim, maybe for the audience, and not just Mubadala, but give us your sense of sort of the lay of the land of the different sovereign entities from the region you come from, because it is, for people who haven't spent the time, quite confusing. And then in that context, what is different about Mubadala? And you mentioned a little bit, which is about setting up the direct investing and technology investing for the last few years. But maybe just putting it in context of the region, where the money comes from, what the intent was.
Yeah, I think that's, maybe I should have started with that. I mean, I think, as Abdil actually was saying, in the Middle East, there are 5 or 6 sovereign wealth funds, and most of the sources of revenue and capital for these sovereign wealth funds come from oil and gas production. There's a very large one in Kuwait. That's probably the oldest.
Yeah. Wafra.
There's the Kuwait Investment Authority.
Yeah.
And then in Abu Dhabi, there's 3. The very large one is called the Abu Dhabi Investment Authority. I mean, they manage, Kuwait and Abu Dhabi Investment Authority manage plus or minus, close to $1 trillion each. And then Mubadala is, we call the younger brother in Abu Dhabi, which manages about 300 billion. And then obviously, recently, in the past 10 years, we've seen the emergence of the Saudi Public Investment Fund and also the Qatar Investment Authority, which are coming up very quick and investing very aggressively. So, and the premise of these sovereign wealth funds, the strategy there is around long-term sustainable value creation and diversification of these economies. So when there is a day where the oil runs out or there is no longer value for the oil on the ground, that there is a very strong financial resource to tap into. And I think each of these sovereign wealth funds has their own strategies, and they operate in a different way. Some are much more passive. We as Mubadala tend to be a lot more active. We have offices all over the world. We have an office in Rio. We have offices in the US. We have an office in Beijing. So we tend to operate. We're very active in the communities. We're very partnership oriented. Like other sovereign wealth funds, we take a long-term view. We like distributions, we like monetization and exits, but at the same time, we can potentially hold on to assets forever. There are cases where we can take a permanent view on a certain investment, especially if it's accumulates significant amount of value. So I think that's the sovereign wealth funds of the Middle East. For those in the audience, they are increasingly becoming, they were, but I think they're increasingly becoming very, very important investment institutions. And what's interesting that what we did at Mubadala about 10 years ago is we set up an entity within Mubadala called Mubadala Capital, and we actually take third-party investors. So even though a significant amount of our capital is from the state, from the shareholder as Abu Dhabi government, we actually manage capital from 250 other investors around the world. And it started by other investors coming and saying, hey, we like what you do in Abu Dhabi. We've seen some of your investments. We'd like to be a part of the network and the capital. And that's how we started. We started developing strategies associated with that. 2 days ago, there was a very big announcement where another sovereign wealth fund in Abu Dhabi created a partnership with General Atlantic, which is a very credible and reputable technology investor. So what we're seeing is the elite financial investors and institutions of the US, of the West, starting to look at how can they partner with these sovereign wealth funds. And it's very different from the old days where you just show up. You either come to the region looking for money, and then the sovereign wealth funds would show up to your annual AGM once a year and have very nice dinners, and then they would go back to the nice offices in Qatar and Abu Dhabi, and you'll see them every year, once a year. The sovereign wealth funds of the Middle East are becoming much more sophisticated, much bigger, much stronger, much more active, and are very interested in being a part, ingrained as a part of what happens on the ground. And I think that's a very, very big shift that we've seen in the past 2-3 years.
Including, I think, one thing that you didn't mention, Ibrahim, which I have heard now multiple times, is how do they bring this innovation back into their own home country?
Yeah.
So you have the hub that you had created for incubation.
Hub 71,
Hub 71. If you work with QIA or Doha Venture Capital, they have certain mandates that you have to open an office there and you have to work and employ local people. So it becomes a tool for the government to actually maybe not just diversify, but get their foot into the door of what the next sort of evolution will be for value creation.
That's right.
And I will say Ibrahim and his team have been great partners to work with because they are active. And we've done a lot of co-investments together and worked on companies together. And the teams talk to each other about what they're seeing. So it's always, for us, we don't just look for partners that can just give us capital. I think the business has changed. You look for partners that can help each other succeed. Abdul, you talked a little bit about, your strategy. Why don't we see more of what you're doing from your region, from Latin America? Like, I don't hear of many sovereign entities. You may hear of pension plans, maybe.
Sure, yeah. That's a very good question. And before I answer that, trivia, the first sovereign wealth fund ever was created in Panama. And this was around 1945 or so, true story. It was called the Constitutional Fund. And it was mainly invested in New York real estate, and I don't know where the money went, but it no longer exists. And this is, we're sort of a reincarnation.
That's a cool statistic.
I don't know where the money went.
I
won't be a very
don't know.
good answer to my investors, I can tell you.
Right. I wasn't around then, but so we're sort of a reincarnation. It's a fair question, and I think what the Middle East is doing. I think with the different funds is we meaning the region should take a page out of that. I think there's the reasons are kind of complex, but easy to understand at the same time, right? It's political, is distrust of institutions. Any chance that I get, I tell the FAP's story, which is, during COVID, it worked as it was designed to do. The fund was created, we grew it organically because we didn't get any new money in. We as a country and many other countries got into trouble because of COVID. The government said, okay, we need some money, and we were able to provide it. The market, helped us a lot that same year because, we were able to recuperate a lot of what we paid out. So any time that I have an opportunity, I tell that story because I think, the capital is there, the people are there, the talent is there. It's just the political will in a lot of these countries. To create, such an entity, and they've.
We have to remember these are entities owned by the state. They're government entities. They have their own issues in government and how decisions are made. And every government is different. And so. Right,
and you've seen some of them be created, they flourish, and then they just get their heads cut off.
Yes, we have a very good partnership with Khazanah from Malaysia. And for the longest time, they were very worried they'd have to subsume one MDB's leftovers and basically swallow that. So there are political considerations to any such entities. Right. Ibrahim, let's talk a little bit about what's changing in the investment landscape and what you guys started out doing. I know you have visibility into a lot of funds because you're a fund-to-fund investor as well. What are you thinking of these days?
Yeah.
By the way, last time I asked him this question was probably 4 years ago, and we were sitting in Abu Dhabi, and the person sitting between us was from the Vision Fund.
Yes, I remember that.
I won't go further than that.
No, well, the Vision Fund experiment was
message.
was a very special one.
No, it was a fun moment.
It was a fun moment, yes, and a lot of money, a lot of capital. It's interesting. I spent first of all, I think. We're LPs in some of the most important growth funds in the industry. And a lot of these growth funds and a lot of funds are just very, very busy sort of triaging their portfolios and trying to make sense of their I love when I ask somebody like, how are things? Oh, things are great. Things are great, and our portfolio is doing so well. No, it's not possible. Well, if you're great, then you've deployed a lot in 2020 and 2021, and if you've deployed a lot in 2020 and 2021, then you're dealing with challenges. Obviously, the pacing of that informs where you are, and there's again diversification and all that. But a lot of these funds are dealing with uncertainty. We don't know how to price right now. I think we're all facing that. There's still a lot of carnage, especially in the late stage growth. We're seeing that, and I think the hangover will take. So in many ways, I feel like it's humbled. It's humbled the industry, and it's.
You think it has?
Sometimes like I love when I meet like a lot of some funds say, hey, we didn't invest in FTX because we met SBF and we know he was a fraud. No, you didn't know he was a fraud. He's the most charming, smartest, most visionary person we've ever met. One of the people. So no,
he had that aura around him.
He did. So I mean, a lot of funds just missed it because they're lucky. A lot of people got caught, and I think that's just an example of a very unique example of how it brought some of the best investors to realize that we've all lowered the bar.
Well, listen, it was also, as we learned this morning and through Milken's discussion, more money around than ever before, trying to find some yield somewhere. So, when that happens, you have excess on one end, supply and demand, the other end gets the benefit of it. So
I think it's a good moment. I really believe, and just to tie it back to sort of our topic around sovereign wealth funds, I think this is also a very important moment for our institutions. We were also part of some of the momentum that took place in 2020 and 2021.
Little less than your neighbors, but for sure.
A little less. I mean, we again, that's as a result of us setting up 10 years ago.
Yeah.
When COVID happened, we didn't just go set up and say, we're going to start investing in tech. And then when the correction happened in early 2022, we also, didn't find ourselves completely lost and spinning out of control. But the reason why, I just want to make this one point, that it's a very important moment, because when we started in 2016, there was two major points of concern from the technology industry about sovereign wealth funds. Point number one was, you are tourist investors, you will invest when things are great, and you will retreat completely when things go bad. And point number two is, you do not participate in supporting the company journey and the founder journey. And we've spent 10 years trying to address these fundamental
and you have addressed it well, at least from our experience.
So this is why it's important for us not to retreat during this time, but to be thoughtful and to be active and to, I don't want to say founder friendly or just support anybody, but to be very, very
realistic.
To be smart investors and to be consistent during this important time, both to support our fund partners that need our support, but also our founders and companies, because I think there's a very unique, the vintages over the next 2 to 3 years will probably be the most important for sovereign wealth funds in technology.
I mean, for founders, that are here, I mean, I think that's very true, and it's probably the most stickiest, money that you can have, and this is not our case, but what I observe is, just the level of sophistication that Middle Eastern funds, as you guys are, have been able to accrue is pretty impressive, right? And it's only, I think, going to get even better, just given again where oil prices are and natural gas is kind of low, but it's going to come back. But
Saudi Arabia, I have a very funny FTX story for you in a second, but I was there for the FII. I'm sure you were there as well.
Yeah.
They have $1 trillion of excess revenue in 3 years, thanks to the price of oil.
Yeah.
There's a new sovereign entity being created every day. Money has to go somewhere.
Yeah, I mean, I think the surplus is very, very, very big.
Yeah.
And I think there's a lot of investments happening in the region, in infrastructure, in education, in energy transition, in food, and all this is enabled by technology.
I will say, if you go to Abu Dhabi, and I've been going now for a few years, and I've seen things change. Some of the world's best architecture, the museums that are being built, the institutions for higher education or healthcare, it's pretty incredible how it's been diversified from the source of income, which is, we could call it in some ways luck or fortune, right?
That's right.
So let's now move to geographic areas. I think one thing to remember, some of the pioneering work around what sovereign wealth funds done came out of Singapore. I think the GIC and Temasek were leaders here. They predate some of the Middle East funds by a couple of decades, or maybe a decade and a half. And for the last decade or so, maybe even longer, China has been an incredible area of investments for you. How are you thinking about geography, where the opportunities are? I know you have offices all over the world, and also exposure through various funds. And maybe Abdil can get some hints from you on what the next place for investing is.
Yeah, I think you're right. Listen, the Singaporean sovereign wealth fund, GIC and Temasek, incredible case studies and they built these sovereign wealth funds without oil revenue, right?
Right. GIC has the pension payments from its government employees. But.
So I would say just to break it down into three regions. Obviously, I would say the predominant part of our portfolio today is US and some Europe. We've been quite active in Europe, but it's predominantly the US. We've also built a team in China, and China is its own technology world. And obviously, with what's happening geopolitically, it's ring-fenced. Where there's a team in Beijing. We continue to believe that China has immense opportunities over the next 10 to 15 years, especially in technology. And then, of course, India. Now, and Sumant, this is something you and I have spoken a lot about. We haven't figured out yet how to participate in the immense technology opportunity in India. We've made some investments. We've invested in very large entities like Geo. But I think what's important, just given the nature of Indian technology, entrepreneurs that either scale in India or go to the US, capital markets and potential monetizations, our strategy potentially for India could be similar to what we did in the US, which is identify a small team and set up in India and start building partnerships and relationships. And the way we do it as Mubadala, it doesn't necessarily mean it works for all the other sovereign wealth funds, is we partner with 2 or 3 funds. And we can go from there, but we identify 2 or 3 funds that are in the region active and important and respected, and we can take a long-term view and we can work with them to start learning about what's happening. Meet the founders, meet the community, meet the big tech companies, meet the emerging founders, go visit some of the accelerators.
Yeah.
And we can spend a year just learning and digesting that input. But I think India, and that's what we did in China, and I think India is potentially another very, very important.
Well, I think the key message here is that you have to be on the ground and be part of the ecosystem to be a good investor. And
and have the right partners.
And I think that applies universally. Of course, have the right ecosystem.
Have the right partners for an entity like Mubadala of the scale and size, working like we would not do something in India without having a conversation with you, Sumant, because you would have insight and access. And remember, this is an industry that is not black and white. This is just it's a vague picture, and how do you put it together? And I think talking and triangulating with the partners is an important part of the craft.
Okay. Moving a little bit to how in everyday life a sovereign wealth entity works. So when you think about your decisions when you're learning this firm, how do you get decisions made? Like, what's the structure? What do people get wrong about it, right about it? What do you think people know about it, don't know about it?
I think 2022 was a test case, right? And we go back to the conversation of evaluations. I mean, we also lost money in public markets, right? If you look back 30 years ago, or 30 years, going back 30 years, 30 3 out of the 8 quarters where you see stocks and bonds both go down happen in 2022. So it was a very tough moment, and I think aside from having a great CIO and CEO,
Incredible.
I think the most important thing there is having a strong board and an independent board. I mean, we're lucky that we in the Panama Fund have that because let me tell you, June 2022 or maybe August 22, we would have sold everything, right? If we didn't have that vision. And who does that help? It helps no one because you take yourself out of the market, and by definition, you're basically saying, oh, I know how to time these things, and I'm going to go back in the right time. That's bullshit. I mean, you're not going to be able to do it. So we could have only done that with a strong board and a board that understood what our investment horizon is, and a lot of stick-to-itness, right? I mean,
Which really boils down to long-term strategy and how this plays into that, right?
Long-term strategy. Now, at the same time, you
have a calamity and your asset base shrinks by a third.
And we have to be tactical as well.
Right.
So it's tough to balance those things.
So important to understand the nature of the sovereign entity and why it's been created. So in the case of Panama, given the rainy day nature of it, you have to be mostly liquid because you may need it and still look for returns.
Right.
Is that a fair statement?
Yes and no. If I could have my druthers, I would be 20, 25% in private capital. I'm sure you would like that. And have a small amount in cash. Despite of what cash is paying you now, because you're getting paid to wait right now. So
you're a lot less in private right now?
Yeah, right. We're 5%, and we just got approval. We're going to grow from 5 to 15. So for us, that's a pretty big jump.
That's the exact opposite for us.
Yeah.
So again, I mean, if you are a long-term investor and you don't expect to use the funds, you don't expect to utilize or attend to any emergency, then you should be fully invested in risk assets all the way through. But we can't do that because there's also some headline risk. So despite our long-term horizon, it's a tough balance. We have to sort of look at both sides of the coin.
And so, Ibrahim, is that similar for you? You guys have a different sort of structure? Yeah. How's decision-making sort of work for you?
Let me start, Suman, that, we worked very, very hard to address this perception about sovereign wealth funds being slow and opaque and bureaucratic and indecisive. It's a perception that is quite common in the tech industry.
It is, yeah.
It's very, very common. And, there's reasons for that, and there's history for that. So we worked very hard to change that perception. We all know, every day your brand lives for another chance. So, we've made some mistakes. We've tried to put in place systems where we can make decisions. Our message to founders is we can invest as little as $1 million in your company, and we can invest as much as $500 million in your company. And we can make a decision in a week if we have to, and it might take us sometimes 6 months.
Right.
Now, that sounds pretty cool. I like to say that.
Does it work like that?
Yeah, there were cases where it has worked. And we're not going to make a decision in a week now, though. Maybe in 20.
We noticed.
Yeah, maybe in 2020 or 2021. But to put in place the governance, the teams, the processes, how you interact, it took us 6-7 years to put all this in place to start being able to operate.
And how you had this vision, let's say 6-7 years ago or 10 years ago, and the world is very different now. So what's other than investment decision making or of decisions or pace of investing, what's the next 10 years look like?
We want founders in the next 10 years, the way they speak about Sequoia and Andreessen and
By the way,
March.
how do they speak? I know how they speak about March.
The way they
The others,
speak
I don't-
about the way they speak, the way they and Altimeter and the way they're proud to be associated with an investor like that.
Right.
We want to be up there. We want to be in the top 2 or 3 global technology investors, and the way to do it is, to invest early in these defining companies and ultimately have a portfolio of them, and to show over time that we can do it.
If you ask our founders, and then you think about the companies that are a little bit later stage and are going, let's say a year or so before they can be public or should be, or whenever the markets open up, what you'd often hear is that they would love to have part of their cap table be owned by long-term investors. Not all of it, because you do want some people who are coming in and out to make sure you have a realistic price.
Yeah.
How do you think of your role there? And they would look. There are other sovereign wealth entities that think of their role being that, or even pension plans as being their role being that. What's Mubadala's role?
So absolutely, this is a core part of our growth strategy, to invest in growth stages, and potentially in pre-IPOs, and hold beyond public.
And you own a public book as well, I'm presuming. Yeah.
But I think one of the fundamental design decisions we took was to invest also early.
Which is unique.
And the reason we did that, Suman, this was very important, and it was not easy to do, because we wanted to build much deeper relationships with these companies earlier on. Because you don't build deep, long-term relationships with companies when you come at the pre-IPO. You build it when the companies are being built.
Yeah.
And I think that's a very, very important way for Mubadala to invest, and it's very unique in how we decided to do that. But that makes it very challenging, very, very challenging. We tell founders all the time, yes, you need to have the March and all these important VCs, but also Mubadala along the journey is important as you think about the makeup of your capital.
The couple of deals we've done, the reason why it's been a good relationship is they're all looking to expand their footprint, their business footprint in that region. So having a local partner helps. And I think that's been for us, as we've set up our LP base, has been very interesting, because we have European investors now from Latin America. I'm not quite sure if they do business in Panama, but nice to have. And of course, in the Middle East.
Yeah, these are important markets now. They're no longer
they're growth
secondary.
markets.
They're no longer secondary markets that we will think about if.
And sophisticated buyers of technology.
I think that's a very, very good point. And that's, in the next decade, we've seen that emerge very strongly, that a lot of these companies look for revenue sources in the Middle East. And we can help that. That's a big part of our value add.
Okay. So, Abdel, if you were to talk about your biggest challenge right now, what would that be?
Where rates are going to go, right? I mean, we that drives everything, for a portfolio like ours, and obviously for yours as well. So, trying to see where not only where rates are going, but whether there's going to be volatility around
So macroeconomic sort of issues.
Right. And just not to get too dreary, but there's still a war going on in Europe, and that obviously is very difficult to handicap. We saw, again, 2022 was a tough year, and it reflected there as well, aside from all the other issues. So that's sort of the stuff that keeps me up at night, at least for part of the night. And but the other thing I would say more at the investment level is, we're not as deep investors as Mubadala, but just making sure that we're picking the right GPs,
Sure.
right? To have these long-term relationships.
Well, you certainly did here. So
I know. And I think private investing is long-term investing.
Yeah.
And we're not looking to I think the LPA doesn't allow you to, but we're not, looking at, if things go bad, we're not going to like,
No, you're
close
not getting
everything.
it. If things go bad, you're not getting your money.
Right. So.
Country, what they might.
Right.
They do? Things go bad? Okay.
They do.
So there's I would say those three things.
What about you, Ibrahim? What keeps you up?
I would say, we talk about this as the team all the time, which is what's important is how our portfolio would look like in 2024, 2025, 2026. So the decisions we make today about which companies we support and which companies we stop supporting and which funds we continue with and which funds we don't continue with, it's quite difficult and very, very challenging conversations. And it's making us grow as a team. It's teaching us that technology can be very, very exciting and attractive, but also can be very punishing. And it's important that we remain consistent with a steady hand, because it's not about now. I think it's about the next 3 to 4 years and how we emerge from this. So that's the biggest thing on our mind today.
Great. We have a few minutes left. Is there anyone in the audience who may have a question for our panelists? I'm happy to take 1 or 2 questions.
So I'm intrigued by the goal set, although I would argue you chose 2 firms that others. I'm intrigued by the goal you set for what you want your brand to be. I would argue, not publicly, that you probably chose 2 firms that are about as different as you can get, and one of them you're right about. Sequoia is an exceptional shop because they are excellent pickers. They are the sharpest knives in the street, but that's the venture firm, not the growth fund. So if you want, I've been doing this for 15 years. I'm a seed guy. I get in right at the beginning, and I've done later stage stuff for NEA and others. But
what's the name of your firm?
Right now it's Tenacity Venture Capital. He spun it up at NEA about 20 months ago. I have 15 entrepreneurs that have sung my praises, and that is the single proudest thing I have. They all came to my annual meeting and told my LPs we were great. I loved it. If you're at your range of $1 million to $500 million, it's like, I want to be a
early stage investor,
elite runner, but I also want to be a tank. Do you take board seats?
Yeah, absolutely. We're very active with our companies.
Because that is where, the entrepreneurs that value their investors value the work they did, particularly in the difficult times. And generally, at least in my experience over the last 15 years, when they get to a growth round, they want the best price, they want the most money, and they want you to be quiet and leave them alone. So how do you sort of balance that? That just seems impossible.
Yeah. So what's your name?
Ben.
Ben, thank you for that. So we have, we have separate teams that do the early and the growth. So that's an important design decision. It's like, it's not the same team that's going to do the 1 to 20 versus versus some of the growth. The reason we say we can do as little and as much because of, ultimately we're under one umbrella.
One pool of capital.
Yeah, it's one pool of capital. Some of our earlier stage vehicles have third-party investors, but it's one. But I just want to address specifically your point, which is how are we active on these boards? Give us the money, the growth money, and leave us alone. That's not what's happening right now. That's Ben, it's not what's happening.
Not now, because you're suffering. It'll be the same thing that's happening.
And we'll go through cycles, though. We will go through cycles where let's say, leave us alone. But now they need the giant. They want the giant and the resources and the capital and the network and the access and the steady hand and the consistent support. They're not looking for an investor who's going to spin out of control because their company's spinning out of control. That just makes their situation much harder. So I think it's really important for us to play that active role with the companies that we want to continue backing. And we do sit on boards with the Sequoias of the world, and we have a lot of respect for them. But they're not Mubadala.
Yeah, in my experience, it's a different style or type of investor, and each one has its place. And there are those that love to invest and don't want to be bothered, and they work really well with the companies that don't want to be bothered. And there are those that like to add value and try and add value, and they founders that are receptive to it.
And different types of value. We don't claim that we can add the value that Sequoia does, and I don't think they can add the value that we do.
Yeah, it's just, no one size fits all.
But I do agree with you, Ben. It's very, very difficult to implement the model that we want to implement.
Sorry, I just want to follow up. How many investments can you do
A year
as a total group?
in technology only.
I'm only thinking about venture-related stuff because that is a significant impact on how you can add value.
Core positions, I'd like us not to do more than 4 to 5 core positions a year. In COVID, we did a lot more, and we should not have done a lot of things we did.
Thank you. Thank you for taking the time. It's great to have you both here.
Thank you so much.
And thank you for the audience. And now I guess you're free to go have your cocktail. Thank you.
Appreciate it.